Hey guys, how's it going? I know, another day, another dollar, another whole bunch of stories talking about the end of the world. But I just got three short stories for you here today, so it won't take long. Fed convenes emergency meetings. Has the next financial earthquake begun? The Fed announced a series of three expedited procedure closed meetings Monday through Wednesday this week. I would suggest that expedited rule closed door meetings held by the Fed this were convened in order to discuss the Western financial system, which is obviously beginning collapse again. Submitted by one of my favorites, Dave Kranzler. The Fed announced a series of three expedited closed meetings Monday through Wednesday this week, FRB board meetings. The Monday meeting was allegedly a review and determination by the Board of Governors of the advance of discount rates charged by the Fed. This is somewhat absurd and waste of time as both of those bank funding mechanisms have become antiquated and rarely used. The discount window collects dust until a specific bank's credit profile has collapsed to an extent that it prevents it from accessing the interbank lending market. It's seen as an act of desperation. It's doubtful the meeting was convened to discuss the discount rate. The announced subject matter of two subsequent meetings are perhaps of more interest. Bank Supervisory Matter, Tuesday, and periodic briefing and discussion on financial markets, institutions, and infrastructure, Wednesday. I find the latter two topics in the context of the fact that it appears that the European banking system, to which the U.S. too big to fail banks are inextricably tied, appears to be melting down. For me, the telltale for the Western financial system is Deutsche Bank. Deutsche Bank has emerged as a rogue bank of sorts that has taken on a catastrophic amount of reckless credit market risks, notwithstanding its literal financial nuclear portfolio of derivatives. Deutsche Bank thrusts its balance sheet into every sector of the global economic system that has been melting down over the past 12 to 24 months, including energy, commodities, Club Med, European banks, and junk bonds. It also began to choke to death on bank debt loans to companies like Glencore and Volkswagen. The trading action in Deutsche Bank's stock price has been unable to mask the underlying meltdown going on at the company. Deutsche Bank stock price has been significantly underperforming the BKX Bank Financial Index since mid-July. Coincidentally, or perhaps not coincidentally, the S&P 500 suffered an 11% drop in mid-August. Bloomberg News released a report about 3 weeks ago that surprisingly received little to no commentary in the alternative media. It reported that Goldman and J.P. Morgan were in discussions to buy 1.1 gross notional amount of Deutsche Bank's distressed, I think he means 1.1 trillion gross notional amount of Deutsche Bank's distressed credit default swaps. That in and of itself was not necessarily interesting, but the article reported that Deutsche Bank had already sold off two-thirds of its distressed credit default swap book since October 2015 to Citicorp. The CDS securities were single name, direct, not cleared through the DTC, over-the-counter derivatives, meaning they are of the riskiest, most unregulated, and most toxic variety. If you notice on the graph above, around the time Deutsche Bank was engaged in selling some of its toxic waste the city in October, the stock began to take a dive and began to diverge negatively from the rest of the big bank stocks. And it's just, you can just see it taking a dive. No big deal. You can imagine in your mind how it looks. I don't need to turn the camera around to show you. I would suggest and have been suggesting that there's been a series of mini meltdowns that have been occurring in the Western financial system since late summer. I also have written analysis which has connected these meltdowns to Deutsche Bank and has connected the stick saves in the market to the Fed. I'm suggesting here that the Fed is behind the Citi, Goldman, and JP Morgan CDS transactions with Deutsche Bank as means of preventing Deutsche Bank's collapse. After all, the too big to fail banks in the U.S. are catastrophically tied to Deutsche Bank and the entire European financial system via derivatives. Last week, Deutsche Bank's stock began to sell off hard again. On Monday and Tuesday, Deutsche Bank's stock dropped 6.6% and was down as much as 9%, significantly underperforming its peers. It's my view that the Fed has been conducting an ongoing de facto bailout of Deutsche Bank since mid-summer, using the balance sheets of Citi, Goldman, and JP Morgan as its proxies. In the context of the behavior of Deutsche Bank stock recently, and in the context of what is now blatant market intervention in the stock market by the Fed, and in the context of the news of the bank bail-in in Austria, plus the collapsing Italian banks, I would suggest that expedited rule closed-door meetings held by the Fed this were convened in order to discuss the Western financial system, which is obviously beginning to collapse again. I would also suggest that the Fed is inching closer to implementing more drastic monetary easing policy measures, which could include taking short-term rates negative, and will likely include more money printing, either overt or cleverly disguised. This is why gold and mining stocks have been somewhat melting up despite the recent flood of anti-gold propaganda pouring in from Wall Street and the mainstream media. It's likely that the melt up in the precious metal space has a lot more melting up to do. Boy, we sure hope so. And it wouldn't surprise me if Deutsche Bank collapses. That thing's been toxic for years. We've been hearing about how toxic Deutsche Bank is. Anyway, guys, take care, keep stacking.